We think Tesla will lead the way in autonomous mobility here in the United States, which is expected to generate between $8 and $10 trillion in revenue globally by 2030. China is moving very quickly in this direction, so I'm sure they won't let Tesla lead there. Instead, there will be another company. But in the US, where transportation costs are significantly higher than in China, the value of this will be much higher. All right, so the 7 to 10 pay more people will pay more. If you've used Uber in St. Petersburg, for example, that's all we do there. You know that prices have increased dramatically here, as they have in the rest of the world. So many bearers have a need for an autonomous solution. Background in auto manufacturing, and they don't think this company can ever produce enough cars to justify the kinds of valuations that people are talking about. So those analysts are experts in internal combustion engines. But they aren't experts in electric software engineering. All of that is hardware engineering or autonomous. So whether it's battery technology, artificial intelligence, or software, that's where they've missed. Well, their directors of research have missed them because, as you may know, I've worked for organizations where, if something looks like a car, it goes to the auto analyst. However, if you have someone on the tech side advocating for, hey, wait a minute, this is really a tech company, Cathie Wood's predictions for 2024 are causing a stir. One urgent query, as we examine, the question of whether this is the end for Tesla echoes in the minds of both devotees and investors. Tesla Cathie Woods, fasten your seatbelts and get ready to go on an exciting journey through the corridors of innovation and disruption as we explore the highs and lows, victories and challenges that have shaped Tesla's trajectory. From strategic shifts in their product lineup to the competitive landscape of the global EV market, every twist and turn holds significance in this electrifying saga. Come analyze the most recent revelations with us. Examine Tesla's future and discover what's in store for the company in this video. Welcome to the Tesla Insights page. Please click the like and subscribe buttons to get going. Experts are voicing concerns about whether this titan of industry can really increase production to reach the extremely high targets set, which indicate an eye-watering revenue of 8 to 10 trillion by 2030. This occurs at a time when the company's stock has dropped more than 30% since the year began due to a number of causes. As the focus shifts to the future of mobility, autonomous taxi platforms are discussed rather than drones, robots, or even trucks. The United States in particular is poised to take a significant piece of this pie, given the higher transportation costs compared to other regions like China. However, the competition is fierce, with China rapidly advancing in this domain, ensuring that Tesla won't have an easy ride in maintaining its lead. The rising prices of services like Uber highlight an increasing demand for autonomous solutions. By 2030, the world is expected to generate an astounding 8 to 10 trillion in revenue. Imagine a future when the ratio of cars to parking spots drastically shifts from 5 to 1. This would mean that parking would be much easier. The idea of cars functioning without drivers presents a more efficient business model. Unknown value of real estate. The leader of Tesla, Elon Musk, has also drawn attention, particularly because of his use of Twitter. Twitter is also heavily influenced by AI. It's possible that he will apply what he learns from Twitter and AI to the auto industry and vice versa. Veritas believe that Musk's increased focus will spur additional innovations in Tesla's journey, especially as the firm advances into more efficient AI-driven production techniques. There are various theories about how this might affect Tesla. The truck for cyberspace looms as the next battleground for Tesla, and opinions on its success range greatly from pessimistic forecasts to estimates of record-breaking sales. Regardless of the result, it's evident that Tesla will continue to stir things up, influencing conversations and expectations in the world of mobility and technology. Director Sam Korosov, with an emphasis on cost, research on robotics and autonomous technology, recently wrote an article showcasing the special qualities and competitive edge of the Cybertruck, power and range of effectiveness. Let's break down Elon Musk's creation, which is expected to shake up the industry. Analysts are baffled as to whether the Cybertruck belongs in the smaller SUV or pickup truck category. However, like the Model 3 and Model S before it, the Cybertruck has the potential to carve out a niche market for itself thanks to its unique features and design. Think about this. The price of the Ford F-150 Lightning was recently increased, but we predict the Cybertruck will be cheaper, while still providing competitive performance and range. Now let's talk about the form factor. Provocative, isn't that? It all comes down to grabbing consumers' attention. Now let's move on to price. Sure, Tesla's market capitalization may appear enormous, but analysts frequently say that when you take into account the potential of autonomous technology, the possibilities are virtually endless. Ignore the effect of autonomous mobility on margins, which could rise far beyond traditional car sales. Speaking of autonomy, skeptics have been proven wrong, but with recent advances in AI, the future appears brighter than ever. If autonomous travel becomes a reality, Tesla may be the first company to reach a $5 trillion market cap. Currently, the stock is trading between $180 and $200. But when autonomous mobility is included in the mix in 2027, the projected base case jumps to an astounding $2,000. That's a possible growth rate of between 40% and 60% over the course of the next 7 years. Time is ticking, so secure your little Cybertruck model right away and step up your collection. Let's now examine how we arrived at this projection. Understanding those S-curves, which represent patterns of innovation and adoption, would have helped investors like Cathie, who still views Tesla as her ace in the market, realize that when it comes to Tesla's remarkable growth, it's not just about watching from the sidelines for fans of the company and those with a keen eye for the next gem in the stock market. In 2015, the forecast put the number of electric vehicles at 250,000 by 2022. Fast forward to today, and we're looking at a staggering 7.7 million. Quite the leap. Your one-stop destination for the most recent information on Tesla is Seeking Alpha. Targets for Tesla stock price innovation from Tesla and everything Musk-Elon. The best source of pro-Tesla news on the internet is Seeking Alpha. Ignore the mainstream media's negativity toward Tesla and get the facts straight. Click the link in the description to receive a special discount. Now that we've covered that, let's speak expertise. Customary, while some auto analysts may doubt Tesla's capacity to meet demand, they are omitting an important detail. Changes in the air on Wall Street. The conversation is shifting from just cars to embracing Tesla as a tech powerhouse. Despite covering Ford automakers, analysts are now focusing on the electric vehicle giant as its shares take a sharp nosedive, plunging over 30% since the year began. This is where Tesla shines, leaving the NASCARs scratching their heads. Although this is still relatively far from where change can still be made, the SL has been impacted by analyst downgrades, notably a recent negative recommendation from Wells Fargo, and rumors of a possible downturn in the market for electric vehicles are fueling the flames. But let's take a closer look. Gerber Kawasaki Wealth and Investment CEO, Ross Gerber. Management comments on the decline of Tesla, Elon Musk, and Twitter were not really included in the original story that most investors bought into about Tesla. For a while, we all thought that this wouldn't really affect Tesla and the demand for its products. But as time has gone on, we can all see that this has happened. And the demand for Tesla products is clearly lower. They've had to discount and take other actions that hurt margins and returns, which ultimately hurts profits for Tesla. So you know you've got that problem. Where's the bottom when they don't advertise and don't do anything to create demand? But the CEO of the company goes out every day and damages demand through his actions, essentially every day. Yesterday, unfortunately, according to Ross, a lot of investors believed Tesla's tale without taking Elon Musk's Twitter antics into account. His activities have affected demand, causing the business to use profit-eroding discounts and other strategies. As investors and enthusiasts alike, we're left wondering about the trajectory of Tesla's stock and its potential in the constantly shifting automotive landscape. From the strategic considerations of their product lineup to the impending challenges posed by global competition, it's clear that Tesla's story is one of constant evolution and adaptation. But as we consider the insights shared today, let me ask you this: will Tesla's bold approach to innovation continue to pay dividends? Can they navigate the competitive landscape and maintain their market dominance? What surprises lie ahead for us on Tesla's exhilarating journey? Do you agree with Cathie Wood's predictions? Let us know your thoughts in the comments section below. Thank you.